Today I want to talk about the North Korean ballistic missile test and its impact on markets. More specifically, I want to address the comparisons made between Bitcoin and gold. The two asset classes tend to trade in tandem during times of geopolitical instability. And to illustrate this, I have a graph of roughly the last 48 hours of trading action, which compares Bitcoin to a number of other safe haven assets, as well as one risky asset in the Dow futures. And you can see here when the reports started coming in, Dow futures fell right away, and the other safe haven assets acted just as you might expect. Gold increased in value, the Japanese yen appreciated against the dollar, and bond yields fell as investors bid up bond prices. And we can see here that Bitcoin actually increased in value on a percentage basis, similar to gold. But what's really interesting to me is that if you look at the 24-hour volume, when the reports started coming in, volume didn't spike that much. In fact, if we look at the South Korean exchange Bithumb, you'll actually see that earlier in the day, volume was higher than when these reports came out. So if we're going to attribute the price action today to the North Korean ballistic missile test, why was there such a delay between when we discovered this and when price started to increase? Now, there's two main reasons that I have to address this. One is that the cryptocurrency market is a lot less efficient than the stock market. In other words, the price that we saw here, the movement that we saw here, didn't reflect the full market. Keep in mind that most people who invest in Bitcoin are more from the technology side than they are from the finance side. So maybe they started piling in when they saw the news this morning. But a more realistic possibility is Bitcoin broke a key resistance level. You can see that over the last 2 weeks, Bitcoin's been trading roughly between $4,000 and $4,500. And this morning, Bitcoin broke above 4,500. In fact, I believe it went all the way up to 4,800 or so. I'm not exactly sure of what the peak was, but the point is, it broke above its previous highs, and I think that was a signal to a lot of investors. I think a lot of people jumped in when they saw that, and when bots saw the increase in value as well as the increase in volume, they likely jumped in as well, which caused this huge momentum boost. All of this is to say that I think the North Korean ballistic missile test was a catalyst, but it is not the primary driver behind this increase at this point anymore. Now, I want to close things off with the comparisons made between Bitcoin and gold and some of my insights. So, in my opinion, Bitcoin somewhat requires a lot of bull market conditions to continue its run. The availability of capital is very important to Bitcoin, and you may not be exactly sure what the tie-in is here, but as more blockchain startups come and as more ICOs happen and VCs get interested in Bitcoin and the blockchain technology, really what we're seeing here is increased visibility, right? The financial industry is starting to look into Bitcoin more. More institutional investors are looking into it, right? Goldman Sachs reports that more clients than ever are starting to ask questions about it. Another characteristic of bull markets is that investors tend to be more risky or more risk agnostic. And when you look at AMD, Nvidia, Tesla, Amazon, Google, all of these different companies, right? You want to sort of chase that performance, right? Or you want to take part as part of the greater fool philosophy, where you think that you can sell at an even higher price, even if you don't think it's worth what it is when you pay for it. Another thing is that Bitcoin has never gone through a true bear market. Now, Bitcoin was created during the 2008-2009 recession, but it wasn't really traded around then. And the only times that Bitcoin's been traded for real volume, where investors were actually interested in it, we've been in a bull market, right? And if you're looking for more characteristics of bull markets that I think are great for Bitcoin, check out the article I have on Seeking Alpha that sort of breaks those out. But really, I think Bitcoin relies a lot more on bull market conditions, even if it does somewhat hedge against geopolitical instability. So I would say for people who have gold in their portfolio, don't replace it with Bitcoin, but consider using Bitcoin as a supplement, right? Bitcoin has a lot more upside. It's much better in bull markets than gold is. And I also think Bitcoin is a good hedge against geopolitical instability. Gold has its place in real bear markets, right? Where you really are facing those dot-com bubbles, where you're facing those 2008 crises. Unfortunately, my audio went out towards the end of the video here, but I wanted to close off by saying that I do think that Bitcoin has a place in one's portfolio. Of course, you have to be mindful, just as you would with any other asset class, what else is in the portfolio and how concentrated it is in growth opportunities versus value versus capital preservation. So let me know your thoughts in the comments on cryptocurrency's place in a portfolio, how it compares to gold, and just in general what you think. Thanks for watching.